Hello, and welcome to the John B. Levy & Company podcast. I'm your host, Rick Young. We're talking now with company partner Andy Little. Andy, the midterm elections are over. Republicans did pretty well. Will their victory have any effect on the commercial real estate market at all?
Yeah, Rick, I think that's a great question. I think businesses were expecting to come through these midterm elections and have a lot of clarity. And the answer is I think we're going to see more gridlock. But that may be a good thing. I think commercial real estate, regardless of these elections, is going to come out okay.
Let's get to the markets, Andy. Are there enough lenders participating in CMBS 2.0, and is the pricing becoming more efficient?
I think that's a real bright spot in the commercial real estate is that CMBS 2.0, which is sort of the updated version of the old CMBS, which fell off the cliff in 2007, is now back. And it's less hype than reality. We actually are seeing a lot of deals getting done, and there's a whole depth to the market. What we're seeing on recent deals that we've had in front of CMBS lenders is that the pricing efficiency, and what I mean by that is they're pricing loans now within 5 to 10 basis points of each other. 6 months ago, 3 years ago, you might have had a difference of 25 to 50 basis points. So now this change, which is very recent, tells me a couple of things. It tells me that the bond buyers are out there for commercial mortgage-backed securities. There's a depth to those buyers, and that makes the market more healthy, more stable.
Well, Andy, you recently attended a conference where you said the mood of the investor was changing and that they're more on the offensive now, right?
Yes, absolutely. And I think this is the institutional investors, cash buyers, in the third quarter in particular, they changed their mode. They got off of defense, got onto offense. And that's a great sign. That means that we have buyers out there, and buyers means a healthy market. What we need to see is for the banks to get back into the market and turn from sort of that fear to greed. There's that necessary tension between fear and greed that always drives the market. And right now, I think what we're seeing is that the banks as a whole are really still in that fear mode, and we need to get them into the greed mode.
Now, what about the fourth leg of the commercial real estate financing market?
I think 3 out of 4 legs in the commercial real estate finance market are pretty strong. Life insurance companies are lending. They've got a lot of money to put out there, and they're active. CMBS 2, as we talked about, very active. The GSEs, the government-sponsored entities, Fannie, Freddie, have been very strong throughout this whole mess and continue to be very strong. The banks, however, on the whole, they're just not lending. If you look at the call reports, they are still shedding real estate loans from their books as a whole. What we expect to see in the next 6 months, 3 to 6 months, is the larger banks starting to lend a little bit more. I think we'll see them come out of the woods first.
So we're watching the top 25.
Yeah, I think the top 25 banks, the JP Morgans, the Bank of Americas, the Citibanks, I think we're going to see them lead us out of this. They've got, as a whole, they've got less of a concentration of real estate loans on their books than smaller banks. And when I say smaller banks, I mean banks in the community, the lenders who were doing the construction loans, who were doing the unanchored retail, the hotels. Those banks, those smaller banks, are still very heavily concentrated in real estate loans, and that's a problem. That's going to take a while to clear.
All right, great information. Thanks a lot, Andy.
Thank you, Rick.
Next, on the John B. Levy & Company podcast, we'll have some predictions for the commercial real estate market for 2011.